It doesn't matter.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanen.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Joel Elkanen and Dennis Dick. Got a good show for you folks today. The Hurricane Irma trade is continuing to be the theme of the week, so we're going to keep harping on that and try to cover pretty much every single opportunity there is to be had as the storm heads towards the United States later this week or on the weekend. So we got the Irma trade going on. We got a lot of central bank stuff today. We have Draghi speaking. We have a couple Fed speakers today. We have restoration hardware going through the roof. GPRO raising guidance as well. Nelson Peltz's white paper on PG is out. So we'll discuss all that and we'll take your questions from the chat as always. Our guest today is at 8:15. That is Marc Chaikin. He is the founder of Chaikin Analytics. Joel, what's going on in the markets?
All right. So if you're looking at your front month contract, at least on the TradeStation platform, they're showing December. So that as of today, that's where the volume is going to be going. But I'm still going to be talking about the September contract, ESU 17. And the levels on that, 67.25 is your overnight high. Yesterday's high, 69 even, and Tuesday's high just above that. So we'll make 24.70 a four-star resistance on the upside. On the downside, we had a weak open, but we covered right back. So keeping an eye on that pre-market low, 57.50. That is the area of Wednesday's low as well as Tuesday's closed. Looking at the crude oil market, if you're looking for a double top, well, you may have one here in the 49 handle. Pair of highs at 49.42 and 49.33. So that's your area of resistance. And gold and silver, gold holding up here at 13.50. Ace was pointing that at a psychological level there. 3-day high, 13.49.70. See if we can clear that for another leg up. Little pause in the action. And silver, just dancing around that $18 level. 18 is holding up as the exact high for the session, but we did trade over 18. That was on 2 days ago, and that traded up to 18.09. Dennis, how you doing here on this Thursday morning?
Looks quiet, Joel. Flat on the S&P. That calm before the storm.
There's a roll going on, and we've talked about this in the past. And what goes on in the roll? If you're long to SEP, okay, and you want to roll that contract to the D, so you have to sell the September and buy the December, or if you vice versa, and the other thing. So during the rolls over the next couple of days, you see some gappy price action because the contracts are being spread out. So yeah. I'm looking for some action today. If we could clear 24.70, I see a lot more upside. And if we break the lows in the last 2 days, I see some downside. But you're going to see some air pockets in the market as well.
Let's jump over here to the hurricane tracker. And obviously, this is the major concerns. I mean, the jumps at Home Depot and Lowe's yesterday were incredible. Those are continuing here this morning. Both of those stocks trading higher once again. Nice list. I'm going to post this in the chat right now. This is coming from StockTwits, and I'm just posting it right now.
Who has StockTwits? Because I want to
This is the user. Her name is Teresa66 on StockTwits.
Okay.
And she posted a real nice hurricane list for you. So these are all the stocks, that she's got on her list that, and there's probably a few other ones too, but some of the main ones are going to be affected either the good or the bad on the hurricane. And just want to make sure we do have sound, right? Yeah, we do. Okay, so I know in the chat there, hopefully, Spinner, you can refresh there because the sound is working. The list here is Home Depot, Lowe's, obviously, we just talked about them. LL, we've talked about that on the show. That's for flooring. She's talking, and this is all like the construction stocks, so stocks that they're going to maybe get a pop because they're going to have to clean this stuff up. SHW, Sherwin-Williams for paint. OC, Owens Corning for shingles. USG for building materials. Got GNRC, which we've talked about lots on the show, and this is what everybody always thinks of with the hurricanes. That's your generators. SERV she's got for cleanup. Waste management she's got for garbage removal. And then property insurance stocks. And she says here, if it's wind damage, these get affected. If it's flood damage, that's often covered by the Fed. So that's good information too. I don't know if that's correct, but that's what this user is saying. Allstate, HRTG, UVE, HCI, Travelers. I'll add a few more to this list. The reinsurers, which she's missing a few. There's a ton of them though. RE, RNR, AHL, AXS. Those are ones that have just been annihilated already on the hurricane. And it's not necessarily like the hurricane, imagine if it's not as bad as predicted. Stocks like AXS have fallen, like we were saying, 10, 15% here on, concerns of this hurricane being, an absolute disaster. So, there's plays both ways here. If the hurricane's a disaster, maybe these stocks continue to get hit. If it's not as bad as everybody suspects for whatever reason, and that's what we hope for, some of these stocks have the potential to, go the other way. So great list here. She's also got rental cars, Hertz and Car, because I guess, when you're in trouble, you might have to rent a car. HT, Zebra, CAR. There was some analyst action on a couple of those here this morning, so just be careful there. URI for equipment rental. MGRC for equipment rental. And then moving trucks, U-Haul and Ryder, UHAL and R. Just a fantastic list put together by that user. Give her props again on StockTwits. It's Teresa66.
All right. The insurers, when she look at it as them, did she get buys and sells on the list, or was she?
Come on, Joel. You want to be honest? She's giving you ideas.
Okay, no.
Because
I thought that I didn't know if she was giving shorts.
Obviously,
as well.
The insurance stocks are all if the disaster, and I'll just explain. Insurance is going to get hit if it's a disaster that's more than expected. The insurance stocks probably get a hit. If it's like an earnings report, it's all on expectations now. They're expecting a major disaster. If it's anything less than a major disaster, I would expect those insurance stocks to rally on Monday. If it's anything more than, an epic disaster, if it's more and worse than expected, I'd expect them to get hit further. So this is almost like an earnings report now. A lot of this is priced in, you kind of late. It's a Johnny come lately. You come in here and buying GNRC now. Expectations are that you need an epic disaster. And if not, it could actually go the other way. Coincidentally, GNRC is catching a ratings change from Bank of America today. They upgrade, I believe, to neutral. So, there's some analyst action on that too. I'm actually long GNRC as well. These are hurricane trades. I have a few of these stocks on myself. Probably going to take them off before the hurricane strikes because we don't know what the extent of the damage is going to be.
Okay, and GNRC, that's trading up in the pre-market. I don't know if Texas Linda's come in the chat yet, but she was holding it 44.59, and that's your pre-market high, so we will keep an eye on that. And let's see, you got to go out to the monthlies here. I wasn't joking around the other day when I said 44.84. That was your high back in February of 2017. Looking at the pre-market action. The other stock I just talking about pre-market action. I don't know who asked me about Sarepta yesterday, SRPT. Never took out that pre-market high. It tried on the open and sold off, but ended up having a strong close as well. So if you're trading any of these stocks related to the hurricane or getting a pop, make sure they go through that pre-market high for continued follow through on the upside.
So that's your hurricane list there. And obviously those are stocks that are going to continue to move today and tomorrow ahead of the hurricane on expectations on how the hurricane's going to be. And then we have the actual event that's going to happen, when it hits, Florida on the weekend. And then we're going to know a lot more to the extent of that damage come Monday. So you're going to see probably some pretty violent moves in these stocks one way or another, depending on the extent of that damage. So I'm treating it like an earnings report. This weekend is the event. What is going to happen is all based on expectations for all these stocks now. Jumping over here just to other stocks in the news, we got to give the props to Jason Raznak at Benzinga. He has been all over. He's all over Tesla, all over RH. Jason Raznick reaping the benefits here this morning of his call. RH trade up 37%. Is that right? 37%. It's up on its earnings report. Holy cow, Joel. This is incredible. Spencer, give us the numbers. Are they just the best company in the world here? What's going on?
I don't know. He came on the show, I think it was 2 or 3 weeks ago, and you guys were like, and he was saying RH is awesome, and you guys were like, what? You don't know what you're talking about. And then look what happened.
We were right for a while.
Yeah, you're right for a while. But, so here's the numbers for RH Q2 adjusted EPS of 65 cents versus a 47-cent estimate. Sales of $619 for $606.4 million. So they a big beat on the sales, a big beat on the EPS. They're also raising their outlook for the fiscal year. The EPS came for Q3 came in higher. The sales for Q3 came in a little pretty much in line, but they're raising the outlook for the fiscal year, and the whole thing is pretty much a good report.
Gone. 67.40 here.
Yeah, I think we're actually trying to get Jason Raznick
Jason
on the hot. We're trying to get him right now. He's here for once. He's
a busy boy.
He's a busy guy. All right, I'll have Raz hop on here for a minute. And Jason, why don't you tell us what exactly you were thinking or you were seeing in that made you an RH bull?
Is famous Dennis Dick on here though?
Yes, okay. Yes.
It's famous Jason Raznick now. You make calls like that, Jason. We're gonna just give this show over to you.
Yeah, can we get some of the writers to write some of these calls? So that was from about 2 months ago. It was in the summer, and we were talking 2 different stocks, Tesla and RH. I think Tesla was probably 270 then, with 350. But Restoration Hardware. The reason I was bullish about it, I'm married. My wife loves the company. A couple things that make it stand out from other retailers. They have a membership price, so you get a discounted price for their products. Just like Costco has the membership price, and they make the money on there. They also have an unbelievable return policy. So think of it a little bit like the Costco of home furnishing and having this unique and looks like really nice furniture, and people get excited about going to shop at Restoration Hardware. I mean, I know a guy, and probably was one of the catalysts for me actually buying the stock. He drove from Michigan to Chicago to Restoration Hardware because it had a much bigger Restoration Hardware store. I mean, he's going all the way to Chicago just to go shopping, all the way to Restoration Hardware. It reminds me of the early days when you were dying to go to an Apple store. And that kind of excitement, the kind of passion, it's hard to, play the story of like what the PE ratio is. You're talking about something people are excited about and passionate about. It's always hard to go against that kind of passion, and that's kind of what's proven out with Restoration Hardware. Now, the stock has moved around a lot. I mean, this thing has gone up, down, and 30% gain yesterday, and it's but it's one of these retailers that is still able to attract an audience, and you want to go sit, feel, and touch the item before you buy it online. So, as they would say, stop doing that, Spencer.
That was me, sir.
That was Brett. Well,
that was Brett. Come on now.
So Brentster here too.
I wanted to chime in.
And so, as they say, what is e-commerce resistant? What companies? Restoration Hardware so far has been that. I mean, the one that is the online competitor to Restoration Hardware is Wayfair, and Wayfair has been getting killed. So maybe the see it, feel it, touch it thing.
Raz, I just wanted to hop in and say I've been to that Chicago Restoration Hardware, and it's more like a bar where all of their goods are on display. You walk in, you ask for a table, they take your name, they can pour you some champagne.
They give you a drink?
They give you a drink right away, and then you walk around.
Oh, that's cool.
And it's basically just people sitting, conversing, hanging out, but it's all good Restoration Hardware stuff.
Is it a big store?
It's probably one of the craziest stores I've ever been in. It's amazing. There was a line to get in when I went in.
That's great. Yeah.
Yeah, it's sweet.
So long and strong Restoration Hardware. And that's some good color. I don't know if you guys in the chat room, but I'm here for 1 minute, but September 28th. I don't know how many of you guys, but you should be coming to the Benzinga FinTech Summit, September 28th.
I've been telling them.
Like Gene Munster, he'll give you his next Apple pick. That was when he went long on it. It was $1, $1.50, or $14 somewhere around there. I think it was $1.50. So, and all those guys, go to bzsummit.com. Spencer Israel will give you a coupon code, and you should be there. I'm telling you, people don't like to go travel. Seems like a hectic thing, but you come to one day and lives can be changed. You meet people, the network, you never know what happens, and you never know the connections you make and what that can lead to. So we hope to see you there, and I'll give you my next Tesla or Restoration Hardware pick. I have one that is coming about, but I haven't gone full-fledged into it.
Okay.
I was out of the office for 2 hours yesterday, investigating a little further and getting more excited about it. This is a stock that could go from like 10 to 60 in the next 2 years.
Well, you'll have to tell us about it when you're ready.
And you're going to let us know this at the summit.
You're
at the
going to tell
Benzinga
us.
FinTech Summit.
Okay, great.
Okay,
Great.
that's a good reason to go
I'm
out there right now,
excited.
because Jason Raznick has had 2 awesome calls here. He's 2 for 2 on this show, guys.
All right.
So you may be 3 for 3 out there at the summit. Get out there.
All right. See you guys later.
All right.
Thanks,
Jason
thanks,
Raznick,
Joel, for letting me come in.
Jason
Appreciate
Raznick,
it.
founder and CEO of Benzinga. Thanks a lot for hopping on with us. And we give him credit where credit is due. He was bullish RH, and it's worked out.
2
for him.
for 2.
He's
2 big
2
calls.
for 2. Yep. Yep.
And it's in his pocketbook. He's getting rewarded for his calls there, making money.
Next time he
That's what
leaves
it's
the
all about.
office to go investigate a stock, I'm going to follow him and see where he goes.
I want that stock pick too.
Pre-market high 70.40, Dennis, trading at 67.65. I mean, what do you do? I mean, I know what I would do if I had any options or, long this thing. I'd be rigging.
Me and you was gone.
Tell me about the trading action, though, Dennis. Did you get a piece of it?
You know what? I tried, actually. It went fast. So, I wait for the numbers to come out. Numbers broke. And you always want to wait for the guidance. So often what happens in an earnings report, you see the numbers come out, the initial numbers, and then the guidance usually follows a couple seconds later. So you can see the numbers beat, and it gets a little bit of a pop, and then you're like, how's the guidance? How's the guidance? And it's good. And then, you almost got to like jump the gun maybe, because it goes so fast. I mean, you got the news readers, you got the algos out there playing off it. There was a shot at 51. There was a little bit of stock at 51, but it went really fast. I think there might have been a few traders that caught a piece of it, even human traders, because it was there for about 2-3 seconds. I was just going to grab it and it's gone. And then it was 53, 55, 57, and it's gone. You missed it. In hindsight, you could say, why didn't you buy 55, 57? But who knows? It's going to go up 37%. So, that's all risk return there at this point in time. I mean, this is the big pop. Am I chasing it up here? No, I still, I'm not a fan of the stuff personally, but, obviously I've been wrong with that. So saying that.
All right, we'll run a couple minutes behind now, but we're going to take our only break of the day. We're going to grab Marc Chaikin. He's the founder and CEO of Chaikin Analytics. We'll be right back.
I know they're key. They get their people intoxicated, and then they go into the store and they just buy a bunch of stuff. I should have thought
Stuff's
that.
too expensive for me and Joel.
Okay, we'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm on the line with Marc Chaikin right now. Marc is the founder and CEO of Chaikin Analytics. Marc, how's it going today?
It's going well, Spencer. How are you?
Now, where are we talking to you from? Last time you were in Arizona. Where are you right now?
I'm home in Philadelphia, but I'm about to go on a 4-week road trip. So you caught me at a good time.
Well, I hope you're avoiding the southeastern portion and the whole east coast of the United States, actually.
I am,
okay.
Although our hearts go out to the people in the Bahamas and Florida who are just going through holy hell right now.
Yes, that this is something that we've been keeping an eye on now for a couple of days, I guess dating back to late last week. So we've been talking about this a lot. It's sort of been like the theme of the show for the past couple of days is the Hurricane Irma trade, because as Dennis said, yesterday, this is how identifying trends like this is how you make money as a trader, is identifying trends sort of while they're in their infancy and while they're or before they get played out. So how do you I guess what are you doing right now as a trader, as an investor, ahead of a storm like a catalyst like this, where we've already had some major volatility in a couple of industries that are potentially related to it?
Well, normally I wouldn't respond to the news. I'd try and take advantage of it. But there's two things going on in the insurance industry. One is obviously their liability for claims filed on both Harvey and now Irma, and there's another storm behind it. But the other is a report from BlackRock, which came out about a week ago, talking about how the insurance stocks are vulnerable to a 10% decline, mainly because of the way they're deploying their investable funds to try and get yield in a low yield environment. So BlackRock identified the fact that insurance companies have been investing in higher yield distressed credit in areas of the bond market where there's more risk and lower quality corporate debt. So I think what you're seeing is the storm coming on the heels of a negative report from BlackRock. So although the insurance stocks had been leading the market to new highs, you have a company like Allstate, which started dropping ahead of the hurricane. There's really broken support dramatically. And so I think you've got to stay out of harm's way, to quote a phrase, that affects the hurricane afflicted, and let the dust settle here. There are a couple of insurance stocks like Progressive PGR that we've really liked in the Chaikin Power Gauge rating. In fact, all the insurance stocks had bullish ratings, both large cap and small cap, but they're all breaking down right now. In some sense, if it wasn't for the BlackRock story, which has clearly made the rounds of the institutional market, I would be looking for buying opportunities. If you look at the chart of Progressive PGR, which is primarily in the auto and home insurance business, this looks suspiciously like Southwest Air did a couple of years ago when the Ebola crisis looked like it was a potential destructive force down in Dallas. There was one case of it and it was contained, but yet Southwest Air dropped almost 20%. It was a great buying opportunity. I think this was October of 2014 or 2015. So some of these insurance stocks, once the dust settles, are going to be great buys.
You mentioned broken support. Are you looking at technicals ahead of a major, potentially fundamental event that we're going to get?
Well, the technicals are always my fail-safe. The fundamentals for stocks like Progressive and Allstate were very strong before the hurricane season started. When you break strong technical support, in the case of Progressive, which peaked at about 48.50, it was 46, which was convergence of our lower volatility and our long-term moving average trend line. It's now closed yesterday at 44.94, up from a low of 43.90. So I'm watching that 46 area. I think in uncertain times, the technicals are your fail-safe, and they're really more valuable in volatile times than the fundamentals, because the fundamentals can only tell you what the potential is. The technicals tell you what the market thinks. And right now, the market is just shying away. There are no bids for the insurance stocks. As I said, Progressive did bounce up almost 2% yesterday. But technical analysis in the midst of a storm is your best guide.
Mark, what about the reinsurers? Because they're all getting hit hard too. I mean, RE is one that obviously, a lot of these insurance companies give the risk over to the reinsurers there. And these companies can make a lot of money over the years, but when you get an event like this, they really get hit hard. I mean, a stock like Everest Re is down 25 points here in the last 3 days. RNR is another one. Renaissance Holdings, that dropped 10 points the other day. And then you can look at AHL or AXS. Those things have all been hit really hard too. Do you think there's a potential for some of these stocks to rebound as well if the hurricane is not as bad as everybody predicts it is?
Well, I think the hurricane is going to be as bad or worse, but yes, I do think there are opportunities. I'm looking back now at a 5-year chart as we speak. This is the biggest single 7-day decline in Everest Re over the last 5 years. And there have been some, major destructive events, but they have something called reserve funds. This doesn't come out of the blue for the reinsurance industry. They know what they're doing. And so you've got to factor in two things. Selling in this day and age is never over on one day. So you had a huge decline over the last 2 days. It typically takes 3 days for the sellers to wash themselves out. But there's no real level to look at Everest Re. Once it broke the 260 area, and it's trading to close yesterday, 227, there's no real guidelines as to where you find support in the stock. It's down into a mini support area, which is established in early 2017. So long term, I think these stocks are very attractive. Everest Re over 5 years has gone from 120 to 275. And I think there's still potential. But if you look at something that I look at in times of distress, which are Fibonacci retracements, Everest Re bottomed out at around 175 in 2016, went up to about 275. So that's 100 points. A 50% retracement would take it down to 225. That's pretty much where we got yesterday. A 618 retracement would still maintain the uptrend, so that, or at least contain the down movement. So that's maybe another 20 points to the downside. And I think somewhere in the 200, 220 area, this is a stock you have to look at as a potential buy.
Mark, what about the other way? Some stocks have actually been moving up significantly here since, we've had these hurricanes, coming through. Harvey, obviously, Home Depot and Lowe's got to pop off that. They've been flying the last 3 days because of Irma. Do you think this is starting to get overdone on a stock like Home Depot and Lowe's as we're looking at these stocks, which, we're actually out of favor a month ago when all of a sudden Amazon was going to start selling appliances online? Everybody's forgotten about that. Now everybody's flocking to buy Home Depot, Lowe's, generic GNRC. What are your thoughts here going the other way? Do you think this is just a short-term pop for these things and they tend to, revert to the mean?
It's definitely a short-term pop. You've now got a quadruple top in Home Depot. Chaikin money flow, which measures institutional buying and selling, has been negative since mid-May with only a couple of days of positive readings. And I think this is a great opportunity to get out of Home Depot. Because any emotional buying like that tends to reverse itself. However, I do see some opportunities in the retail space. My bullish stock of the week in Chaikin Market Insights on Sunday was Kohl's. It turned out to be a lucky pick because Kohl's announced a deal with Amazon yesterday to sell the Amazon, shopping Echo app in Kohl's department stores. But the power gauge, our Chaikin power gauge rating, our multi-factor fundamental model turned bullish on Kohl's last Thursday as analysts started raising their estimates, and the stock popped 5% yesterday on the Amazon news. I think there are selected turnarounds in the retail space that are starting to look interesting. So Target turnaround, Kohl's turnaround, Williams-Sonoma. I also saw this morning that Urban Outfitters said that their year-over-year sales decline is going to be in the small single digits, whereas analysts have been looking for 7.6% decline in year-over-year sales. I can see analysts starting to raise their estimates on Urban Outfitters. If they do, our power gauge rating will turn bullish on Urban Outfitters because analysts have been lowering their estimates. So although I normally don't like to bottom fish in weak industry groups, I do think that there's a turnaround coming in retail. The whole Amazon effect has basically cast a pale over these stocks. And I think that if you look selectively, you're going to find some early stage buys in the retail space. I also think the apparel stocks, which had clearly established an uptrend in July, are also attractive, but only on pullbacks because they've been making new highs.
Mark, you mentioned Amazon. I want to ask you about that. Now we're getting speculation that Amazon could potentially buy Kohl's, but another notable call I'm seeing this morning, I'm seeing this on Twitter, that someone's saying that Amazon will be worth $3,300 a share, and that I think this is MKM, and that it could overtake Walmart in its in terms of U.S. retail business. Do you have thoughts on that?
I'll go the opposite way on that. Also, a brokerage firm, R.A. Davidson, put out a bullish report on Amazon this morning with a $1,300 price target, which obviously a lot higher than the 967 where it closed. Every stock has its day in the sun. Amazon has had a decade in the sun. And I think the whole Amazon story is fully priced. We put out a bearish recommendation on Amazon 3 weeks ago when the stock was trading at about 258. It had a bit of a rally, but I think any rallies in Amazon below 1,000 are selling opportunities. Anything in the 990 to 1,000 area. Money is coming out of these stocks. Institutions are looking for safer havens, and Amazon is clearly a stock that where everything good has been priced in. The reality is nobody succeeds at everything. Remember when Michael Jordan tried to become a baseball player, the greatest basketball player ever, arguably before Stephen Curry. He failed miserably. Nobody succeeds at everything. And just because you've got the steamroller effect going doesn't mean that you won't get antitrust pushback in Congress and in Washington. And Amazon has bought businesses before like diapers.com and then closed them down because they couldn't figure out the business model. The biggest impediment to Amazon on the upside is buying Whole Foods, in my view, and that's why everybody seems to like it here. Amazon has been successful because they were the antithesis of bricks and mortar. They're now embracing bricks and mortar. You can't have it both ways. I'll go back to one story because I've been in the business 50 years. There was a stock, an apparel stock here in Philadelphia, and they had a great deal of success opening up little boutique stores in major department stores. So they had no bricks and mortar risk. They were basically like kept women, and they did extremely well. This was a preppy brand. And then they went out and they started opening their own stores. And guess what? The company went bankrupt. And I think Amazon is not going to go bankrupt, but I think Amazon getting into bricks and mortar retailing is perhaps someone ringing the bell. They say they never ring the bell at the top. For me, that was the bell ringer. And I just looked for a technical breakdown, which came at the 1,000 level, to start looking for a spot to short Amazon, because I just think you can't have it both ways. You can't be the disruptive online retailer and then also get into bricks and mortar and expect that you can master bricks and mortar, which is very tricky.
All right, I'm going to let the Steph Curry, Michael Jordan comment slide for now. You get a free pass, but that's your only one. Marc Chaikin, founder of Chaikin Analytics, thank you so much for joining us today.
Always a pleasure. Thanks so much.
Thanks, Marc.
What's doing, guys, in the market? Anything?
We got a jobless claims number, a little weaker than
Crickets. We had a 0.5 point pop there, Joel. That was a big move for the S&Ps.
I know, Dennis. I'm just reporting the news. I'm not making it up, but we're hanging up here near the highs of the session, unchanged here at 65.5. As I mentioned, 67.25. That was your high, your current pre-market high, and 69 even. So we're running in some resistance here at the 2370 area, the 2470, little handleitis there. See if we can get above that. We have some news out of GoPro, Spencer. What did GoPro lay on the street today?
GoPro laid down some guidance this morning. Let's get those numbers for you right now. They see Q3 sales and their gross margin at the high end of the outlook range. So Q3 sales, the range is $290 to $310 million. So the high end of that range. They'll be profitable during Q3 on a non-GAAP basis, but not profitable on a GAAP basis. And GoPro, and I'm seeing in the chat too, GoPro and Amba both getting pops.
This is just every dog has its day type of trade, and there's been support down here in the $8 area forever. So Marc just talked technicals. I mean, you can just say GoPro at 8 has a wall of support. So every time it gets down in the 8s, there's buyers again. Again, you're getting rewarded if you picked it up down here. It's been multiple times you could have bought in the 8 handle and sold it up here in the 10 handle. Every single time it's popped, though, it continues to drop back. There's some value here, like it's kind of a value play, but the problem is still the one-trick pony thing. They need to, I think, embrace drone technology. If they can somehow start attacking, and getting more into the drone technology, that's where they're going to, have their next big hit of product. But if they continue, just with, the cameras there, it's over. They had their day already. Stock was 90 on that. It's back down to 8. There's no value there anymore. What they need to do is start embracing drone technology. To start doing that, the stock could actually get a lift. But I don't mind it, when you're picking it up in the 8s. Now, when it pops 14% on an okay report, I don't know if I'm chasing it here this morning. But, the $8 support level has been huge, Joel.
Yeah, it did get a pullback. Easy on the upside here, folks. 1048 is your pre-market high. After you made that 1085 high on August 8th, sellers ganged up at the 1050 area, 1040, 1042, and 1048 with 3 other highs in mid-August. That's what you hit in the pre-market. So I'm not getting real giddy if this thing gets over 1050 because you could run into more problems at 1085. I think I would sit back, see if this thing could just get a clear breakout over 11 on some heavy volume and see if it could get a run to continue. But keeping an eye on that pre-market high, 10.48.
Cabela's in the news here. CAB getting a huge pop last night. Looks like the deal might go through here. Spencer, details.
Oh, God, I'm so sick of this.
I know it's just been something that, it's, the deal's on, the deal's off, the deal's on, the deal's off. You're playing all those whipsaws, man. You're making money, though, because this thing went, obviously, the original deal back in October or September 2016. Stock goes from 45 up to $65 or $63 because the deal's going through. Then the deal's falling apart in early 2017. Stock goes all the way back down to 45. Then it goes all the way up to 60. They're going to have the deal again. Then it goes all the way back down to 51. No deal on the table. The deal's back on the table, 61.24. So if you were sticking with it and saying this deal's going to go through and buying every pullback, you're getting rewarded here this morning. Looks like it is going to go through. Spencer.
Yeah. Federal Reserve approved Synovus Bank's acquisition of Cabela's, world's foremost bank. That sort of paves the way there for Bass Pro Shops to acquire Cabela's for $61.50 per share, which comes out again to $5 billion.
Did you say the Federal Reserve?
Yes,
okay.
That's what I said.
All right, 61.40. You hit that. You're just holding up over 61. On again, off again deal. Once again, if I had it, maybe cashing out here.
I need the register because it went off the table before. It looks like it's done this time, but
who's buying them? Is it Bass Pro Shops?
Yeah, Bass Pro Shops.
But they needed financing was the problem.
So
that's why
SNV
got involved.
Synovus is buying a Cabela's world's foremost bank, and that'll pave the way for this other transaction, as I understand it.
I think their stores are too big. But anyways, if
the crazy big.
Have you been in one?
I go with this Cabela's and it's already over, so it's getting taken over. Whatever. I wouldn't want to be taking it over. I'll tell you that much. I completely agree with you, Joel. The overhead on these stores is absolutely incredible. I go into those Cabela's. I can't even fathom how these things make money because the stores are so huge. I mean, it's like 2 Walmarts. There's, it's awesome. It's a cool store. But I don't see people checking out left and right. Like you don't see like a million cash registers like you do at a Walmart or Costco. I guess maybe the margins are higher on the stuff they're selling there. But I always just wondered how these things made money because I never saw a lot of people cashing out. And I see, there's a few people in the stores, but a lot of people are just looking at all the cool stuff in the stores like me. I don't know if I've ever bought anything Cabela's, but I go in there and I could bring my kid in there. You can look at, the fish in the tank and, all the animals on the wall and stuff. And he likes it. It's a fun place to go, but I don't know how they've made money. Anyways, either way, being rewarded here this morning here because it looks like it is getting taken over.
Just one note on Cabela's. I mean, they are very, very choosy where they put their stores. Actually, Dundee, Michigan, which is not too far from Monroe, where I grew up. They put a store in Dundee, and the reason is that they draw people from Indiana, Ohio, all over Michigan, and I'm not sure what their other locations are in Illinois, but what they do is they come into a town like Dundee that no one cares about, and not only do they buy land for the store, but they buy everything around it. And then they sell it for hotels and restaurants, and there's also now a water park there that I haven't got Lisa to go to yet. But that's part of their business model.
I mean, Walmart does that too.
Yeah.
I mean, that's the smart way because they're a driver. They drive traffic generator.
Well, the in terms of buying the real estate, that's not in new. That's what McDonald's does.
Yeah.
I mean, it's the same thing. Buying you.
I mean, if
you
you're
own
a
the land.
traffic generator, why wouldn't you do that? I mean, okay, we can make this area awesome just by putting our store there, and then everybody's going to come around us and buy real estate from us. I mean, it's licensed to print money. Why would you not do that?
All right, let's move on. Is Amberilla just jumping around here? Is Amberilla getting a boost from this? From
A little bit. It's up a buck here this morning. AMBA has been killed, obviously. Got all the way down into the 40 handle there, 40.06, 40.57. You can argue a little double bottom, though. Little double bottom action. I know it's 50 cents difference there, but this thing's bouncing around. Just fell 15 points, in 2 days. So you get two closes within 50 cents of each other. I'll call it a little double bottom there. 42.5. So you're out. Thing gets below 40, I'm out. It's getting a little pop with GoPro. Am I really excited? That's GoPros, Amba's getting a pop with that. I don't know. Amba's kind of its own thing now. It's not really linked to GoPro as much as it used to be. So little sympathy move here, but I'm not jumping in and getting all excited. But as long as it stays above 40, the Bulls have a case.
All right. JP Morgan must have hired the analyst from Deutsche Bank here because they have some unkind words here for General Electric. I don't have the note in front of me. Dennis, do you have it, or should we just go
I don't have the note in front of me either, but everybody's talking about it here this morning. So JP Morgan giving some basically trash talking GE here this morning in a note. There was no ratings change, but it wasn't a kind note. And that is why GE is absolutely getting lambasted here this morning. It's down another 2%. This is a stock, obviously, I have in my investment portfolio. It's been a bad one. Had it in there a long time. 3.94% dividend. Still been paying me to hold it forever. But, it would have been nice if I would have actually chose the right one. When I had the option, I could have went into Synchrony Financial, SYF, their financial arm, and I chose GE. Chose the wrong stock, I guess, because this GE has been a no for the last couple of months.
All right, lower 24s. You put in 3, 4, 5 lows there. 24.15. You had a real weird day on Friday, and that thing just took off like a bat out. Well, you know where bats come from, and just popped up over $25. And I'm like thinking, what is going on that? And it was big volume on that pre-holiday weekend. And then Barron's comes out. I think Ben Levison gave a real bullish piece, but that didn't make a difference. The street still hit it on Monday and recovered a little bit yesterday. But I'm looking for the lower 24s in this one. If not sure we're going to get it today.
I think it's going to test it. I think we could get it today. We've come down a long ways. I think we could test that 24.15 low, and it needs to hold. But below 24, this thing's in a world of hurt
today.
Again.
Dennis, you think we're going to test it today?
I think we can test it today. I don't know if we take it out or not, but I think we can get down there and test it. I'm not going to, you got to give me odds on that because it's 24.40, so it's got to fall another 1% to get there. But I think we can test it today. I just watched it fall 2%. Can it fall another 1%? Sure it can. Don't kid yourself. You could test it there today. And I think, if you're buying at 24.40, why not wait for the test? Because I think it's going to trade 24.15. It's a matter of whether it bottoms there or whether it takes out the 24 and goes lower. Honestly, I think the stock is just not, I've had it in my portfolio for 16 years. I'm going to stick with it. But, wow, I think it's going below 24.
Someone on Twitter did screenshot the note, so I can read from it if you'd like.
Sure.
They did say, this is, again, JP Morgan, excuse me, on General Electric this morning. The title is Preparing for the Fall. It's Worse Than We Think.
Wow, that is a bad title.
the main bold highlight there at the beginning here is $24 we now view as a ceiling as opposed to the floor prior.
Whoa.
With something in the high teens as a quote investable fair value.
Wow, that is an ugly note. But they didn't do a ratings change on it though.
No, they just trashed it.
They will just trash it, but we're not going to put our money where our mouth is. We're not going to actually put a ratings change on it here. They should have down. If they think it's a seal, why did they downgrade to sell?
So it's underweight at JP Morgan. It's underweight.
Well, they were already at a sell on it.
It's underweight, and the price target
and that is a JP Morgan sell rating underweight.
Yeah, and the price target is $22.
Okay, so they can't go any lower.
$22 is their price target as of the end of this year.
All right, so then they're saying teens possible here. Yeah, it's possible. I mean, this stock's in a world of hurt right now. Some of these legacy companies have been around for 100 years. They're just not in favor. Sentiment is not in favor for the stock. I'm not coming in here buying anymore. Like I said, I've had this in my investment portfolio for 17 years. I'm probably sticking with it. You get some good ones and some bad ones. I did add up all my stocks, Joel.
Yeah, I wanted to bring that up.
Yeah. So, I was saying yesterday, I think I have 80 or 90 stocks in my investment portfolio. I have over 100. I have over 100 stocks in my investment portfolio. And this is how often I look at it. This is funny. So I logged in yesterday because I said on the show yesterday, I'm going to, go and, see how many stocks I have in my investment portfolio, let you guys know. And I'm looking at my investment portfolio, which I look at once a week or once every few weeks sometimes. And I'm looking at this stock that I've had in my portfolio for a while, IXYS. And I'm like, holy cow, I'm up a lot in that. I'm like, why is that up at $23? And it got taken over a week and a half ago. I have it in my investment portfolio. I didn't even notice it. It got taken over by LFUS for 23 in cash or shares of stock 0.1265. I have so many stocks in my investment portfolio that I did not even notice that, my IXYS went up 50% last week.
Yeah. Well,
that's, Kramer says you can't keep track when you have over 10 stocks in your investment portfolio. He must be absolutely right, because when I have 100, I don't even notice when my stock got taken over. IXYS taken over. News to me. Didn't know it. That's 1, 2, 3, 4, 5, 6, 7 trading days ago. Lucky, because I probably would have sold on the first day at 21 and a half. So that's 23.15 right now. I'll probably be selling it now, though, because when stocks get taken over, I usually ring the register.
Okay. We're jumping around a lot today. I just want to make sure that we got all our earnings, but no, I see there's a couple one. Did Barnes & Noble report yet?
Got the Barnes & Noble numbers, BKS.
That was this morning. That was actually only a few minutes ago, I think. Q1 EPS, a 15-cent loss versus a 12-cent loss estimate. So they missed that by 3 cents. Sales of $853 million versus $871 million. So they missed that sales number as well. They see bookstore sales to decline in the low single digits, and the Q4 comps were down 4.9%. I don't know what else there was to say.
I trash talked the stock yesterday. I'll trash talk it again here today. I don't, get. I said what I said specifically yesterday on the show was I don't know where it's going short term. I don't know where the earnings report is, but I said when I look at the stock a year from now, I think it's gonna be lower than 785, and it's 710 here this morning. So I'm right the next day. So I get some right too there, Jason Raznick.
All right,
but I get some wrong too. Jason doesn't get any wrong. It doesn't seem like yet. So.
All right, you got a dip pre-market low in this issue, $7 even. That's the area. I mean, between 685 and 710, actually between 680 and 710, that's been scooped up over last 3 times since June. Then you got a gap to fill to 640. So not a good report here from Barnes & Noble.
I didn't even read the report. I don't care. I think even 710. I think when I look at a year from now, I'll say it again. I think it's lower than 710.
All right, I'm not going to
take over rumors and stuff for Barnes & Noble. We've heard them all before. I don't think anybody's coming here and buying BKS.
Okay,
my opinion.
I tend to agree. And I guess that's it. Fuel cell, we really don't care about any other.
No, the earnings. We're out of earnings season, so not a lot. I mean, there's hurricanes, lots of cool things to talk about. So I'm going to talk about boring out of bookstores that we don't need to even, that Amazon already ate their lunch years ago. Imbalances here. I haven't given you an update here. Home Depot, again, I mean, these things just do not stop going up. Eventually, they will stop going up. And I tend to agree with Mark. Usually on these pops, when you get a stock that pops 5-10% because of a one-time event, which, is a hurricane, unless we keep getting these hurricanes, I think, I'd bring the register probably before, maybe Thursday, maybe Friday, we continue to get a pop just because people are going to be speculating that it's going to be that bad. But a lot of times it's not as bad as everybody thinks. And sometimes it is. Maybe, and Mark says it might be bad, but sometimes the stocks are just priced in, the perfect storm, and maybe it's just not in the long term for Home Depot. So I think if Home Depot gets anywhere at that 160, I'm bringing the register on that too. But it's got 71,000 shares to buy again this morning. Lowe's is up another bucket. It's got 36,000 shares to buy. The hurricane trade, which has been going on for 3 days here now, continues, as you see in generic GNRC, which caught an upgrade here today. It's trading higher. The lumber liquidators, full disclosure, I have that one on. It's trading higher. Some of your financial stocks are getting beat here again. Some of your insurance stocks look a little bit weak here in the pre-market. The hurricane trade continues.
Yeah, I just want to bring attention to a tweet here from Nick Shaheen. the dragster is on right now. He's on live here. He's
I was trying to jump in, but you guys wouldn't let me.
All right. Well,
okay.
I mean, he moves markets. What's the dragster saying?
Nothing crazy at the. I just wanted to basically say that he's talking right now. He's nothing really too crazy. He sees rates at current levels for an extended period. A very substantial degree of accommodation is still needed. Those are the two headlines that I'm seeing really. That based on what he said so far, he's been speaking for about 10 minutes.
And I just wanted Nick, our buddy Nick Chaikin, has a tweet here. Draghi, master of speaking out of both sides of his mouth. Things are great, but not really. Market is getting his message wrong. So words of caution here from Nick Chaikin on Draghi. I mean, he always seems to like give the market a pop, and I'm going to keep an eye on this, especially with the overhead resistance we have developing in the S&Ps. But getting a little a Draghi boost right now. S&Ps are up a half a point at 24.66. Even gold and silver are getting a pop. Gold did pop over that 1350 level, 1353.70. Back down here. Silver, new high of the move at 1814.5, but back down at 18. So Draghi moving the markets here. And
I mean, gold and silver too have been moving too. Not only with the hurricane, they've been moving up on other concerns. We still don't forget it's not all just hurricane. You still got some, interesting stuff happening overseas in North Korea. So that is not off the table here yet too. Gold has been going up for a reason. I know the S&Ps have held on very well, and maybe they rally no matter what. I jokingly said, "Oh, if you have a nuclear war, then we'll have to, that'll spur the economy even further," and they'll probably buy the S&Ps on that. But it's just, there's a lot of things to be nervous about here. And I think you're going to see more headlines coming from North Korea as well. So just because it's all hurricane talk right now, don't forget about North Korea over there too. So there is some things out there that, you could worry about.
All right. We covered some of the analyst ratings. We did the JP Morgan.
Oh, we didn't really cover very many analysts.
Okay, let's do a few.
FireEye, FEYE, that's getting upgraded here this morning from Morgan Stanley to overweight. I think it's a $19 price target. Nice pop here. FireEye is one that I had on my radar here too. I'm kind of interested in this one. I know it's not your classic value play, but I don't know. I feel like there's, as long as it stays above the whole 1370 area where it put a hard bottom in mid-August, I think there's life here. Now it gets a pop. Now it's kind of getting away from me because it's starting to come up to all that resistance ahead at 16. And if you look, you can see May, June, July, August, all those highs in the 16, just over 16 area. It probably put a lid on it again.
You can include May in that. You popped over 16 in mid-May. You did it again in late May, also in July. So that's your level. Getting a nice boost. Nice kind of rounding bottom here. Feasting on that May low that you had in the 1360, 1370 handle. I'm not sure who asked about that, but who was it? Jar or somebody that was looking at it? But getting a pop here in the 16 handle. Watch out for sellers.
Race getting downgraded from overweight to underweight at Morgan Stanley. They're going completely the opposite way. Put a price target of $100 on Ferrari, RACE. The stock has been on fire here until today. And this is, when you want to talk a stock, this is one that we don't give a lot of love to on the show. We've never really talked about it too much. In 2016, February, this was $31. $116. So you're talking about a stock that has doubled and doubled again. So it's up to over 300% in a matter of a year and a half. That's been an incredible run here for RACE. Everybody talks about Tesla, but this Ferrari company has really been on fire as well. Not today, though. Stock down 4.5% as Morgan Stanley goes to an underweight price target $100.
All right. It is getting pounded here. I mean, those are really expensive cars, aren't they, Dennis? I know I never see you driving around.
You ain't gonna see me buy a Ferrari. You know me. I shop at Big Lots. Come on.
Yeah. How's that? What year is your F-150?
2009. I keep it driving. I just got the Pacifica though. I just bought a 2017.
Oh
Pacifica.
Yeah, you're the
yeah. You're fully domesticated now when you got the minivan. I bought it for a lot of years. Got the 2 kids. And my wife, I've got my truck and she wanted the minivan. So we got the Pacifica. And it's a nice car. I actually don't mind driving it, but I'm more of a pickup guy. And I keep my pickup. And I don't drive the pickup that much. So
remember I told you to buy 2 when they were down there.
I bought in the financial crisis.
Yeah, I know.
Right when Ford was at like $1. They were giving those cars away. There were so many incentives because they just needed cash back then. I think it was like 49,000 was like the sticker, and I got it for like 36. It was like $10,000 off if you pay cash. And I went and paid cash for it. I'm not even joking. I think in 2009 or 2008, I think even like 10 grand if you're paying cash because you needed cash. And I paid cash, and I got an extra $10,000 off. So literally, I think I walked over like a $49,000 truck for 36 grand.
Did they give you 100 shares of stock? Because I think they
were doing that too.
They were doing that.
I wish they would, huh? Well, I'd be making some money on that 100 shares. They were giving away stock shares too. You could have got 100 shares for $100. That'd been worth. I'd been, hey. So everybody dogs Ford, but man, if you were buying it in the financial crisis in 2009, you're up 1,000%.
Let's talk about Ford and GM for a second here. We're not big patterns guy, but have you ever seen a potential head and shoulder pattern on a daily where you have all the red candles on the left-hand side and then all the, the candles on the right shoulder, all green here? I mean, is this
ExxonMobil? Remember that one time in ExxonMobil we saw go up for 20 days and then down for 20 days?
But Ford is reaching a really critical area here, a major winning streak. Let's see here. 1, 2.
I might sell it.
Really?
I've been in it a long time, and I don't know. Everybody's got me scared now. I hear from Gene, and I hear from everybody else is talking, the test is going to be eating all their lunch eventually. Stocks performed, underperformed, obviously, with, having a good dividend. It's had some pretty good quarters, and they've just never bought the stock. Stock's not going up on good news. What's going to start doing on bad news? It's had a nice run here, 1150. It's come back up a long ways. I'm still down some money in it. I think I'm averaging into the 13s, but sometimes it's got to cut your losses. I think Ford was a value trap for me, and I think it gets back to that 1175. I think I might cut my losses.
All right, John Dotson wants our thoughts on Schlumberger SLB. That's a stock we haven't talked about in a long time. Oil getting a boost, man. You got a great base in there, just at the $63 area. Low of the move, 62.56. This is only the second day here, so of a rally. I mean, put a stop in there, 62.5, 62.40, and see if you can let it run. I'm not sure what it's doing in the pre-market, but getting a nice boost. Dennis, any interest in SLB?
You're chasing it a bit here. I mean, Halliburton, same chart. So these two stocks I trade together. I pair trade these together. They move very well together. SLB, they both form nice rounding bottoms there at 62, $63. And now they started to move. So, the trade was 2-3 days ago when it was starting around and got the breakout over 64. Now, it's up a couple points and you're chasing up a little bit, and it's still a stock that is in an overall downtrend. So that being said, 2-day moves can happen. Stocks can show life for a little bit here. It all depends on oil. You think oil's going back to 60 or you think oil's going down to 35? That's the what you're making a call on here. I'm not sure long-term what I think of oil. I think it could just meander in the same price. Halliburton, similar chart, got killed all the way down to 38. Now he's surrounding bottom, gets above 39, blasts off for 2 days. So, the trade, I think on these were 2 days ago here. Now, you're already jumping on the moving train. I know when I jump on moving trains, I tend to fall under the tracks. So that's why I don't jump on moving trains.
Someone in the chat also asking about dry ships news on them this morning. They reported the successful delivery of a second very large gas carrier. And they
sold something.
Yes, and they see total gross backlog related to the time charter of up to $92.7 million. So they sold something. Exactly right.
They sold something.
Exactly right.
Dry ships. I got bullish for 1 day on it, and we see what happens. So I think I'm going with your theory, Joel. We should never talk about dry ships on this show.
It made a load.
I was eternally bearish. I got bullish for 1 day, and then the SEC got me.
You dipped under $2 here. 218 is the high. I will say there's some air up to 250, 248, your 2-day high, your 3-day high at 272. So if you took it home and you're up a whole 4 cents on this one, keep an eye on that pre-market high of 220. All right, 8:59. Spencer, you want to wrap up the show and preview the final show of the week?
Sure. We got a couple guests on the show tomorrow. One of them will be actually in our office. So first up will be Michelle Krebs. She's an auto analyst at autotrader.com. And then after that, we'll be joined by Andrew Middlebrooks. He is a local money manager. He lives and works in Detroit. He manages some money, runs a local fund, and is going to talk to us about about that and how he approaches the market. So Michelle Krebs and Andrew Middlebrooks on the docket for tomorrow's show. As far as today's show, you can catch the whole thing again on our podcast, which is on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or Premarket, or catch the show as it aired live on youtube.com/Benzinga TV. As Jason Razzing mentioned about a half hour ago, don't forget about the Benzinga FinTech Summit coming up September 28th in San Francisco. bzsummit.com is the name, is the URL for that site, and then a coupon code for our Premarket Prep listeners is BZVIP. That'll get you a discount on tickets. So that's it for us today, folks. Have a good rest of your day. We'll be back with you on Friday for our last show of the week.